Hello and welcome everybody to the Gold and Silver Club Commodity Markets Outlook for the 14th of April 2016, presented by myself, Phil Carr, at the Gold and Silver Club. So today we will be analysing the latest developments in the commodity markets. We'll be discussing our outlook for the week ahead. The live session will be covering an overview of the commodity markets. We'll be reviewing the top trades of the week, live market commentary, trading ideas for the week ahead, of course, answering any questions you may have as well. So I would, as always, suggest if you do have any questions at all, put those into the chat. We'll definitely go through those during the course of today's session. All of your contributions are always very valued. Now, we have lots to cover over today's session. So just before we get into it, let me introduce you to the Gold and Silver Club. We are the world's #1 commodities trading and investment coaching company, regarded as the go-to authority on commodities trading. And as internationally respected experts, our analysis and our opinions on the metals, the energies, and the agricultural markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, Global Banking and Finance Review, the Wall Street Journal. Of course, it's a pleasure to be here on FX Street today too. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth, generate substantial monthly income through commodities using our signature trading strategies. For more information on the Gold and Silver Club and our expertise, please do feel free to visit our website, which is www.thegoldandsilverclub.com. Okay, right, we'll move it over and we'll have a look at the price of gold. So gold is currently trading at $1,239 per ounce. Now, we've got lots to cover over today's session. We'll have a look at that very shortly on the charts too, and we'll talk you through what we really can anticipate as we come towards the US session this afternoon and towards Friday's session as well. Now, if we go over and have a look at our top trades using the Gold and Silver Club signature trading strategies, we've really had some good breakouts over the last week. So first of all, corn, we identified this on our previous session where corn had sold off significantly after the USDA report the previous week. The most bearish scenario had really been priced into the markets. We saw record sell short positions on the CFTC reports as well, which started to unravel the following week as we saw bargain hunters getting in right at the lower end of support. So corn has been a really nice swing trade here. It's now come up to our profit target zone, banking over 210 points of profit on this trade. We'll show you that very shortly on the charts as well. Crude oil, we finally broke out of this downward trending channel. Had a nice little setup on this towards the close of Friday. Broke out in style, which I want to talk about in more detail very shortly. But just to put it on the radar there, at the moment so far, oil, since its lows this year, has moved 61% to the upside. It's been an incredible move on oil over the last few days, and is anticipation of the producers meeting at the weekend on the 17th of April, which I'll go through very shortly when we go through the fundamentals with you. But crude oil, lovely breakout trade, and soybeans as well, finally got a move on, broke through our resistance channel that we entered into previously, and we've come out of that with over 360 points profit here with the lovely breakout on soybeans, which we've discussed as well on these sessions. So ultimately, I hope some of you caught the moves that we've seen over the last week. I will go through with you now what we are looking at in terms of trading opportunities from now until the end of this week. So the first market I want to point out to you is going to be the gold market. Now, gold, we had a lovely pennant formation which formed into the close on Friday, and we with that we saw a lovely breakout to the upside. So on Monday, in fact, right off the open, we saw some good surges on gold. We entered into this position for a breakout trade. We came right back up to key resistance here. You can see this on the chart where gold, yet again, it's found resistance around $1,263 per ounce. Interestingly, at the moment for gold, that was also the previous resistance that we had going back to the beginning of February. Now, the overall price structure of gold, before I go into what I expect to happen next year, I just want to bring you onto a raw chart and just show you what the overall formation is at the moment. So I'm sure a lot of you might be aware, but we've still got this head and shoulders pattern which is forming on gold right now. Now, it's by no means fully confirmed at the moment, but I am aware of the overall price structure of gold right now, and we were certainly aware of that at the beginning of the week when we took the breakout trade, that if gold was unable to follow through above the 1263 zone, it had the potential then to roll over and come back into this head and shoulders formation. Now, that could still change if we get a breakout above this overhead resistance channel. gold could still start to ramp up to the upside. It's been a very impressive move on silver over the last week. Over this week, silver has moved over 6% to the upside. It's now broken out to 2016 highs. It's at 10-month highs at the moment. It's been an incredible move with silver. We've also seen a lot of additional funds flow into the silver ETFs, which I'll go over the data very shortly, but silver has had a very strong move. So ultimately at the moment, gold has hit our profit target around the 1263 zone. It's rolled over, it's started to pull back. At this point in time, we are waiting for the next move here with gold. You'll note it's come off a very important moving average on the chart. We've also got a pennant formation as well, which the previous resistance zone is becoming supportive. If we were to hold on to the current levels, and if we close with a rejection candle today on gold, you can see you've got a nice underlying trend channel, which I'm sure a lot of you have drawn on already. You've got a nice level of support underlying gold right now. If we close the day with the rejection candle, I would look at this for another long opportunity, another opportunity to add into this position for a buy in the short term. We're lagging behind silver at the moment, but ultimately I would like to see more upside in gold here. If we do confirm this with ultimately closing with a supportive candle today, and then we get a break above that level as we head into tomorrow's session. So at the moment, gold is being supported. It's come back down to a key level, key trend line here. You can also just add on these additional trend channels. You've got a parallel channel at the moment, so I do like the potential for gold to follow through if as well the US dollar, if this is it for the US dollar move. So you'll note the US dollar did break down to you can see here at the moment to 7-month lows over the course of this week. You can see we've come down to critical level of support at the 94 zone. That did actually provide support for the US dollar earlier on in the week. On Tuesday we came down to this critical level of support. We've since had a couple of days worth of good follow through here, but we've come back up to a major resistance channel here with the US dollar. Now we've got some data coming out shortly with the CPI numbers and initial jobless claims, but you can see here that we've come right back up to the upper end of the resistance channel. I'm looking for the inverse correlation here. If the US dollar has run out of steam, it's had 3 days of gains here. If it runs out of steam this afternoon and we start to see the US dollar roll over and start to break back down within this overall trend channel, we could certainly start to see that be supportive for the metals. However, if the US dollar continues to break out above resistance here, I would expect that to put some pressure on the gold market. Now, silver, if you haven't had a look at the silver chart, this is a very interesting chart. So number one, silver broke out of its pennant formation earlier on this week. It formed a pennant into the close on Friday. A pennant is this formation, this triangular pattern where the price structure gets tighter and tighter until ultimately it breaks out of that channel. It's a great little setup if you trade metals. We often get these on gold as well. So it did that at the beginning of the week on Monday. It broke out significantly to the upside, broke above 2016 highs. What I'm very interested in on the silver market at the moment is the higher time frame. So if we go out and we have a look at, for example, the monthly chart here, what you will note is we've finally had a break above a major level of resistance on the chart, which we've really been in for the last 3 years here. So we've got major trend channels both on the monthly, also the weekly charts here as well. But you can see here this pennant formation, this overhead triangle setup here. You've got this lovely pennant which has been developing on the monthly chart for about 3 years now. We're finally starting to breach above that level, and I would suggest at the moment, if we were to get a solid close here by the end of this week, silver is really getting started, starting to have this bottoming formation, and it's really getting started for a potential big leg up higher here. You can see there's quite a lot of clean air above 1630 here. If we continue to break out to the upside over the next couple of months here, we've got the potential to start coming up to the 1750 to 18 US dollars per ounce level. So I would absolutely have silver on your radar at the moment. So I'll just go through some additional details here as they relate to the silver market. We've certainly seen some very impressive gains here on silver over the last week here. Okay, so we essentially, if I just go over to some of the data on that, first of all, if we have a look at the inflows into silver at the moment, the ETFs, what have we seen there in the way of additional inflows? Okay, so I'll go over the gold inflows and I'll move over to the silver inflows, because this is quite interesting, and it also relates to the ratio, gold and silver, the ratio as well, in terms of how much silver it takes to buy an ounce of gold. So first of all, assets of the SPDR Gold Trust, the GLD, the world's largest gold-backed exchange-traded fund, they fell by 5 tons to 810 tons on Wednesday. That's interesting because it's the lowest in 1 month. So what has really sparked this big breakout to the upside on the gold market over the first quarter of the year? Remember, gold, it's had its best performance over the first quarter of the year in 30 years. Gold closed the first quarter up 16% this year. Okay, so Q1 2016 gold was up 16%, and a lot of that was due to inflows in COMEX gold and also gold-backed exchange traded funds. So that has been the largest outflow we've seen over the last week. So we've seen significant outflows in that. However, in terms of silver, we've seen an increase in inflows into silver. So we've seen sharp inflows into silver-backed exchange-traded funds, which is showing us that investor appetite for the metal has been very strong. Holdings of silver ETFs have risen by 946 tons since the start of the year. And we've seen holdings for physically backed ETFs go through the roof over the last 2 weeks here. So we've seen some huge inflows into the silver market. And it's you can see that very clearly on the chart from the huge breakout that we've had to the upside, where we've breached above $16 an ounce. So the move that we've had here over the course of Monday was the largest one-day move that we've had on silver in over 3 months. So we've definitely seen some significant moves here to the upside. The US dollar also, so where it slid down to nearly 8-month lows, that has also helped with this move to the upside on the precious metals, but in particular the silver market. So we've certainly seen some big breakouts. You do absolutely want to have gold and silver, I'm sure you have already, but on your radar right now. So with silver in particular, on the much higher time frames, it's really building up for potentially an explosive move in the months to come here. If we break out of this major trend channel and close above it, first of all on the weekly, but then on the monthly as well, this really sets up the stage for some potentially big gains over the course of this year. It's not fully confirmed at this point in time, but you just want to keep an eye on it, because silver is certainly performed some very strong moves so far this year. Now, another market which has also had some very significant gains over the course of this year is, of course, crude oil, and that's very much in focus as we come into the weekend meetings, which I'll go through with you now. So silver at the moment and oil, both the strongest performing out of the commodities over this week so far. If we have a look at oil, it's up 61% in the last 60 days. 61%, which is incredible. Now, the world's biggest oil producers, including Saudi Arabia and Russia, they're scheduled to meet in Qatar on Sunday to finalize a deal reached in February to freeze oil output at January levels, okay, aiming to bolster prices. So we've got that at the moment, which has really helped with a lot of this move to the upside. Now, there's a lot of questions around that meeting, which I'll go into in some detail very shortly. But before that, I want to just touch upon the fact that the huge move that we've seen to the upside over the last week and a half here, we've seen quite a lot of that has been driven, interestingly, by big airlines. So we've seen big airlines making waves in the oil market for the first time in over 2 years, since prices went into a tailspin over 2 years ago, betting this may be the best chance to lock in cheap jet fuel for some years to come. So we've seen huge inflows from a number of airlines which have placed significant trades on in order to hedge prices for 2017, 2018, and even 2019. Okay, so we've seen a very large money flows come into the oil market on the back of airlines. So we've seen certainly a lot of renewed interest from airlines executives who were stung by billions of dollars of hedging related losses last year, but they're feeling more confident at this point in time that oil has reached a bottom in the market. They're starting to shift their sentiment into oil after we've seen the significant move to the upside and ahead of the meeting in Qatar over the course of this weekend. So we're seeing the big oil consumers are also coming around to the idea that we're not going to see too many more significant legs down at the moment. And we're also seeing clients are getting more comfortable with the idea that this is good for price, if not the best price at the moment for oil. So that relates to hedge funds and money managers, where you're seeing there's just more more opportunity, I guess, at this point in time for traders to enter into longer term positions right now seems to be the case ahead of the meetings at the weekend, and also ahead of peak demand, which often occurs over the summer months. Airlines, which typically hedge some volumes every quarter, we've seen them have significant inflows over the last 2 weeks here. So very important. Now we've got the anticipation of the meeting this Sunday in Qatar, which oil producers will discuss a potential output freeze. So that's also fueled a lot of buying to the upside at the moment. Now we've got a few conflicting fundamentals here at the moment. So we saw Russian oil minister Alexander Novak told a closed-door briefing of energy analysts in Moscow on Wednesday that the deal would be loosely framed with a few detailed commitments. So that caused a little bit of a sell-off towards the close just yesterday. The agreement will not be a rigid formulated agreement. It's more of a gentleman's agreement. There's no plan to have any signed binding documents after this agreement, suggesting producers are unlikely to formally agree to rein in production, which now stands at around 2 million barrels per day in excess of demand. So it's not going to be an agreement, but a declaration of intent to say that if everything goes well, they will keep the production at January levels. So that is the latest news on the meeting, which is going ahead this Sunday on the 17th of April, as it relates to the world's largest oil producers. So with that, we are continuing where we're sat at the moment in terms of the price structure. You can see where we have a rejection candle forming on the daily chart. Had a little bit of a shallow pullback just overnight, but at the moment, oil prices are still being well supported. We also saw a sell-off yesterday after the oil inventories came in, which again were 3 times more than forecast. So we had a surplus of a factor of 3 on those oil inventories, which also caused a pullback yesterday. You can see into the close here. We did see a pullback, but a very shallow pullback at the moment. I would suggest right now we've seen a lot of additional buying over this week as we head into the weekend meetings. And where the price structure is right now, if you don't already have a position on at this point in time, I would then be neutral right now, awaiting for that decision at the weekend. We'll definitely be watching on the Sunday Open to see how oil fares when it opens over Sunday into Monday during the Asia Pacific session after the conclusion of this meeting. But right now, where oil is sat at the moment, it has managed to breach above a very key moving average. It is finding some support on the chart at the moment. It is getting a little bit into overbought territory right now. Selling at this point in time, so selling at this resistance zone, I would say, is more risky ahead of the meetings at the weekend. You've also got the Baker Hughes report coming out tomorrow, and typically we've seen the Baker Hughes report be very supportive for the oil price, with an 80% reduction in the amount of oil rigs around the world. So that has been supportive for the price, and that is coming out tomorrow at 6 o'clock London time. So in terms of any new positions on oil right now, I would be neutral if you don't already have a position on, but watching this very carefully. There could be a massive trade opportunity as we come into the beginning of next week, which we'll, of course, be covering for you in detail this time next week as well, to see what actually happened as a result of that meeting. So right now, really awaiting further news on oil at the moment, unless you currently have a long position, which is moving very nicely indeed. I would be on the sidelines for oil, waiting a little bit more further confirmation right now. Now, if we move over and have a look also at, if there's any questions on oil, do put those in the chat as well. If we go over and just have a look at the agricultural markets, a couple of markets for your radar right now. Number one is coffee. So coffee had a runaway move over the mid-March period. We saw huge moves to the upside. We saw over a 21% gain from the lows to the highs. At the moment, coffee has it's retraced into a previous level of support, which turned, you can see here, previous level of resistance, which is turning into support. You've got quite a few key moving averages supporting the price around these levels. Rejection candle, we're starting to base out here. I'm looking for a little bit more confirmation here on coffee, but I do like the potential opportunity for a long at these levels. I would definitely keep your eye out for coffee. If you trade this market, it's one of the best liquidity out of one of the best liquidity markets out of the agriculture markets. You can trade coffee. You've got huge volumes in this market. It's got good day-to-day in terms of its point movement and volatility. It's got a good amount of points it can offer you. So I would definitely keep an eye on the coffee market. If we go over and have a look at the grains here, Soybeans, absolute runaway breakout trade. You can see here we've had a huge move to the upside. This is what's known as a 3 white soldiers pattern, where you break out, close the daily high, continue to break out, close of the daily high. Very similar price structure of all of these candles. In fact, we've formed four white soldiers here, the technical pattern here, broken out of key resistance. Now, we have been all over this trade for about 2 or 3 weeks now, as our research was showing us that there was a potential for some huge moves to the upside on soybeans over the course of this year. So, and we're also, I would put that on your radar for silver now, is at a similar point where it really could start to ramp up to the upside in the coming weeks. But you can see here where soybeans broke above a very key level of resistance, 1919. Since it's done that and it's broken over that level on the weekly chart, it's had a huge pop over the course of this week. So you can see this basing formation that we're seeing on quite a few of the commodities at the moment, and that has just been a lovely pop to the upside. I hope some of you caught some of that move. It's been an incredible move on soybeans. If we go over to corn, this was the trade we also got into once we came down to a key level of support after the USDA report. It's about 2 weeks ago, where the USDA reports was quite bearish for the price of corn, but we immediately saw a buyback at major support zones here. We also got very overextended, very oversold on corn, and this really represented a perfect opportunity to go for a long at support, and we had a tremendous breakout to the upside, supported by our research as well. And this was just fundamentally and technically a really sound trade, come back up to key resistance at the moment on corn. That has just been a beautiful trade. Now, if we go over and have a look at the wheat market, wheat has struggled a little bit. You can see it's got quite a lot of overhead resistance. It did get a pop to the upside yesterday. We're starting to get a little bit of consolidation around this zone right now. Wheat in the bigger picture still represents a good value at the current levels, around the 460 level. However, if we were to pull back down further here to key support, which is sitting at the moment between 440 and 430, that would be of more interest for a buying opportunity on wheat at the moment. If we were to pull back down to major levels of support before then the next major move to the upside here, that's what we're ultimately looking for. I suspect we've come up to major resistance. Soybeans is quite overbought at the moment. Corn's overbought. I am expecting just technically a pullback on these markets at the moment, and then pullbacks once they come back to major support would represent some good buying opportunities here as well. Now, if we go over to the other metals, if we have a look at the platinum market, platinum has also had some significant gains over the course of this week, in the same way that we had a pop to the upside on both gold and silver. Platinum also had a decent move to the upside. It's following technical levels very well. We're getting a lot of these bull flag formations at the moment on the platinum market, where it's essentially consolidating and then breaking above resistance. You can see, I'll just show you this. I'm sure a lot of you are familiar with what a bull flag formation looks like, but essentially we've had quite a few of these bull flag formations where we've just had nice follow through breaks above major resistance here. We've had quite a few of these. This will be the third one that we've had actually in 2016, the third bull flag formation. So I would just have that just on your radar at the moment. This is the way that we've seen a lot of nice trading opportunities on platinum over the course of this year. These bull flag formations, you consolidate, create in the short term lower lows, lower highs, and then you've got a nice breakout to the upsides. This has been the third one that we've seen on platinum over the course of this year. So significant move to the upside over the last week, off some major key moving averages as well. So ultimately, do keep an eye on the metals at the moment. These basing formations that we're getting so far this year, gold in the first quarter being the best performing commodity, very important. And now we're starting to see a lot of funds here now flowing into the silver market. Another point to note on gold and silver, if I just bring it back, we can have a look. Let's bring it over to silver again here. We'll bring it just out to the higher time frames. Again, is the gold to silver ratio. So that measures the number of silver ounces needed to buy an ounce of gold. That slid to a 3.5-month low as silver outperformed gold. So essentially, we're starting to see a little bit of a shift, and that's also shown in terms of the funds going into the ETFs. We're seeing a shift where traders are coming out of gold and they're seeing silver as better value in the short term at the moment, which has really helped with this big pop to the upside that we've seen on the silver market. So it's been an incredible year so far for commodities. It's been an incredible week for the precious metals and also oil as well. Oil in particular ahead of the weekend meeting. So you definitely, I would keep an eye, very close eye on oil as we come into that meeting on Sunday and the results of that as well. Just keep an eye on the news for that. We'll definitely be providing all of our traders with the exact entries, exit, and take profit levels that we'll be taking on all of those setups as they develop as we head into next week, the Monday Open. I would say at the moment, as we head into the US session this afternoon, what you want to be keeping a very close eye on, again, gold here. If gold was to produce a rejection candle into the close later on today, that would give me the sort of confirmation that I want in order to get another position on here for a long. But just be wary until we get that. We could actually be just rolling over here with gold, and it's just starting to get into this head and shoulder pattern. If that happens and it breaks and closes below this trend line, which has been supportive over the last week, I would expect the price to really start to grind lower here. We could start to see a move back to the previous major support levels, which are sitting around 1220 to 1210 here. But we'll continue to watch that over the course of the US session this afternoon. As I mentioned before, silver, you definitely want to have that to hand, and also you want to have that chart to hand and just be aware of that, how it's moving on the higher time frames at the moment, and just watch out for the US dollar this afternoon as we go into the initial jobless claims as well, which is going to be coming up in the next 5 minutes or so, actually. So that could be a nice little mover here for the US dollar. Look out for the inverse correlation with the precious metals as well. Okay, so as always, we will be keeping everybody updated who's a member of the Gold and Silver Club with all of our positions, additional trades that we'll be taking this week. If you would like access to exclusive daily commodities analysis or live training ideas ready to implement, there is, of course, an opportunity for you to do so by being a member of the Gold and Silver Club live trading room. Essentially, as a member of that, you get exclusive weekly live trading room webinars. You get live trade setups ready to implement, real-time trade notifications. You get the exact details of where we are entering, exiting, placing our stop losses on each trade, live interactive Q&A via weekly webinars. You get a week ahead market forecast video, trade watch list, personalized trading plan tailored to your trading goals, access to ongoing mentoring support, and institutional level trading research and market insight. So if you would like access to that, very simply, you can join the Gold and Silver Club live trading room. Just go ahead and go to www.jointhegoldandsilverclub.com. Membership is by application only. All you need to do is complete the application form. We shall get in touch with you ASAP. So it's just at www.jointhegoldandsilverclub.com. You can also get in contact with us at either our UK office, our US office, our Africa office, or our Asia office. Our UK office number is 0207 193 0403. Our US office number is +1 646 808 0403. Our Africa office number is +27 11 083 8403. And our Asia office number is 852-8191-0403. So I'll just leave these details on the screen for everyone, www.jointhegoldandsilverclub.com. So I'll just do a quick check-in again, guys, if there have been any additional questions at this point in time. Okay, KA7, would you hold a share over the weekend with oil, or is that too risky? I would lock in some profits on that. I would make sure that your trade is protected. KA7, we could see certainly some significant moves potentially as well, because that announcement is coming out of the weekend. Oil could gap significantly on the Sunday Open. So I would do what you can to protect that trade ahead of the weekend. Capital preservation important. So I would absolutely make sure you protect that trade ahead of the weekend. We could get some major moves on the Monday Open. Fantastic, and thank you for the question, KA7. Perfect. So as always, guys, look forward to hear from those of you who will be getting in touch. Very much look forward to working with you. I wish you all good trading. Have a fantastic day, and we'll speak to you all real soon. Okay, thanks, guys. Take care. Bye-bye.